Hi, my name's Sam, and today I'm going to be talking to you about incorporation versus unincorporation. These are your main advantages for incorporating a business. Firstly, your business becomes a separate legal entity from yourself. Secondly, there is limited liability in the new business. Thirdly, there are lower corporate tax rates. Fourthly, on future sale of business, you may have increased profits. And finally, there are other various advantages we will discuss. Firstly, I will be talking about the advantage of becoming a separate legal entity. By incorporating your business, you create a new legal entity. This entity, otherwise known as a corporation, has the same rights and obligations under Canadian law as a person. Additionally, a corporation can partake in the following actions. It can acquire assets, go into debt and enter into contracts, sue or be sued and be found guilty of committing crimes. It is also important to note that a corporation's funds, assets, and liabilities belong to the corporation and not its shareholders. Lastly, when a business is incorporated, its legal status, property, and liabilities continue to exist until it is dissolved. This remains the case even if one shareholder dies or sells its shares in the corporation. Now I will talk to you about limited liability. What limited liability means is you as a person are not responsible for the corporation's debts. That means if the corporation was to go bankrupt, you would not have to pay the creditors. Your next advantage is having a lower corporate tax rate. Given corporations are taxed separately from their owners, the corporate tax rate is generally lower than the individual tax rate. This means, in general, you could have less income taxes that need to be paid. One of the biggest tax advantages of incorporation occurs when you want to sell your business. If the corporation qualifies as an SBC and the shares you hold qualify for QSBC shares, then you will be able to use the capital gains exemption to shield your capital gain on the sale from any potential taxes. Other advantages include having a greater access to capital, continuous existence, income splitting, loss utilization, and credibility and prestige. However, it's not all rainbows and sunshine. There are some disadvantages to incorporating as well. Firstly, there are higher startup and ongoing costs related to incorporation, such as initial incorporation fees, ongoing fees, accounting fees, and legal fees. Secondly, I will talk about maintenance of corporate records. So a corporation is required to maintain its corporate records and hold meetings, elect directors, and provide shareholders with certain information, which all requires time and effort. Finally, the income generated by a corporation is taxed at both the corporate level and the shareholder level. In other words, a corporation will first pay taxes on its income, and then shareholders will pay taxes on the dividends received. This leads to a possibility of double taxation. So now that we know the advantages and disadvantages of incorporation, we will be able to analyze the case of William Secord. Firstly, we recommend that William incorporate his business due to the fact that any funds that are not pulled out as salary are taxed at the lower corporate tax rate of 15%. If William was to remain a sole proprietorship, the full $120,000 would be taxed at the high marginal rate. Therefore, the corporation shields the funds he does not require this year from the high marginal tax rate. After incorporation, William has the option of either A, paying out $45,000 in salary, B, paying out the $45,000 in dividends, or C, using a combination of both. So we suggest paying out the $45,000 in salaries from the incorporated business, as this provides the greatest overall tax benefit to William while meeting his financial requirements for the following year. William will be able to use the additional funds from the tax savings resulting from the lower corporate tax rate to invest in securities. This will provide greater future growth prospects as the funds aren't as heavily taxed as if he were to remain a sole proprietorship. Thank you for taking the time to watch our video, and we hope you learned something today about incorporating versus unincorporating a business.